Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. Please hit that like button and subscribe if you already haven't. And just want to do a little disclaimer. Nothing said on this video, past, or even future videos should be construed as financial investment advice. This is just my thoughts and opinions. Consult a financial advisor. I have more below on the disclaimer. So let's get into today's stuff. A lot of stuff to unpack. Haven't done a video in a while, so I'll unpack Wednesday's news too. The economic data, which I normally do. If you look at it, gold went up, and even the market, I don't know if the market's dead. I'm not going to talk about the equities in this case, but core rate month over month, 3%, 3.3 over year. CPI, as I said, inflation's gonna, we're gonna get either a massive bout or bad economic data soon. It's really crushing people. If you look at now some people say the PPI is more leading but this was 4% instead of the 2%. And even jobless claims, 242,000, that was up way above the consensus of 220. 4 week average 2024, 224,000 was up. Let me see the PPI. I know this is like what the wholesale is, but I think the street looks at it as like a leading indicator. It leads the CPI or the core PCE, and that's why it's so important. If that's true, and if you look at it here, this is just an article. PPI shows wholesale inflation jump more than expected and an extended and bumpy journey towards Fed's cut. And, as they still use that word sticky, how about it's not going away and up and away? That's really what they should call it. So let's see. I've read the article before, but oh yeah, excluding food and energy, like the two most, and shelter. Might as well take shelter out. Why don't you just take out everything you need? And it's not so scary once you get past the headline. Like, what a joke. So, anyway, look at this. I was looking at this chart. And if you look at the PPI in 2020, this is around COVID, and it started going up in just straight line. And who knows, maybe if you look it up here, it's sort of basing, and maybe it's looking up to go up one more. So, who knows? I'm not a technical analyst, but you look at this right here, still going up. So maybe it's in an uptrend, and with the Fed cutting rates, I doubt it's going to be in a downtrend. So, but this was interesting. Little to shake confidence that the Fed will cut rates. Realize why is it cutting rates? Look at stock markets up. You look at all these fart coins. I was reading about that. And yeah, so PPI. And if you look at the market's reaction, though, look at the market's reaction. Just right here, the today S&P that was down 32. Dow that's down 234. Gold went down. I normally use Kiko, but this is a pretty much margin call, I guess, type of day. So, and you look at rates today, really up today, 1.24%, and the readings normally come out at 8:30. So rates seem to be up, but they were at 4.2 and they finished up 4.3 too. So it's like I said in the previous video, if gold goes too high, they're worried about rates rising. So that rallies might be capped. So if you look at it, it's just what I said. We're going to get really bad economic data. Maybe we'll get both. Maybe we'll get stagflation or whatnot. So anyway, let's get off this. Let's go into a couple of things I wanted to share with you. If you look at it, inflation has, taken a bite out of the consumer. Consumer discretionary sector bankruptcies are skyrocketing. If you look at it, 99. So consumer discretionary is, and this is the chart they show. Let's go to the chart. Industrials, healthcare, consumer staples, because you need IT. Well, that's government spending. So financials, the Fed, materials people need that, real estate. So if you look at it, yeah, consumer spending, industrial, and healthcare, it's probably because a lot of people just don't pay their bills. There's also a lot of migrants come in, don't they get healthcare and then don't pay for it, and then so I did an article about 1/3 or a numerous amount of prescriptions going unfilled because people they just can't afford their claims denied probably. So in terms of the stock market, I still think it will go up next year. I think they're going to sort of one last hurrah. I could be wrong, but this was interesting. I wanted to share it. Fewer than 32% of the S&P 500 companies have outperformed the SPX this year. Lowest reading in the last 50 years. In fact, the last time it was this low is 98 and 99, and that was before the dot-com bubble. And this is the chart here. This is where we're at. Now, it did improve from last, but it's just like this. 98 to 90, 99, 2020. So, but if you look at it, 2008, they had 2007 had something similar where it was much lower than the normal average. And 2019 to 2020 had a much lower than the average. And even then, 82 they had some before. So we'll see. I mean, let's see. Only 31 have outperformed the index. I don't know if it means that much, but it's certainly coincidental, in my opinion. So just all these signs of a top are coming, and I just want to do a little update. I saw this before I was going to do this, but home prices as measured by the Zillow Home Value Index fell 4% between October to November. Still up year over date, year over year, year to date. Look, since March of 2022, 44%. Wow. Since the 2022 peak, it's up 2.1%, but we've been following on this channel. Last 2 months, the S&P Case-Shiller was negative for a while. Will it continue? But I don't know. But as I said, they'll probably one more year, and then you see all this sentiment. I just wanted to go. I just thought this was also interesting because everyone talks about bifurcation. I was reading somewhere where the rich don't feel it. Now, I could be wrong, but I was looking at Seeking Alpha and I found this. Costco's mixed one, influenced by tax benefit, hike in membership fees, and increase in profits was attributed to a lower tax rate, while membership revenue was underwhelming because of hike in fees. So, so that's very interesting that they cut taxes, but a rise in member was underwhelming considering. So Costco's unperforming, and that's the upper middle class generally. That's not the poor. So of course, how did Bitcoin react? Did it act as a disaster hedge? Not really. If if you look at it, it's a play on the Nasdaq. Nasdaq went down and whatnot. So I think Bitcoin and the stock market bull market's almost over. But a lot of people say I'm just crazy. Mad I didn't buy it. I've done really well with gold miners, some of them, and the royalty and streaming. So I'm not angry about making money or not. But I remember in 2008 to 2011, all I was told was bonds, bonds, bonds. That, you buy bonds, you can never go wrong. You can never go wrong. In fact, for the last 40 or 50 years, if you wanted to be safe, you went bonds. Well, this is the TLT. iShares 20 Treasury bond. This is 2020. 167. I think the high was 171. It was 171. Look where it is now, 91.08. It's even down today. It's not even acting as a safe haven. Well, let's go. Maybe it was down. Yeah, see, look. It's not even down today. It's down 1.1. It was supposed to be the safest. So the bonds, if you look at this is in a bear market. Began shortly after 2020 when the Fed started hiking rates. So all those who think no markets can go down, which particularly stocks, tech, Nvidia, crypto, just remember this. Bonds began a bear market in 2021, and I was told from 2008 through 2011. In fact, some financial advisor wanted to put all my money in bonds because they said they're all great, all bonds are amazing. I remember being told that they can never go down. So look at them now. So yeah, just remember that. Anyway, let me know your thoughts. Hit that like button, subscribe, and we'll see you next video.